All right, guys, welcome. Today I'm going to just simply give you guys trade recaps, tell you guys what I did wrong and right so you guys can learn from my mistakes and learn from my right things that I did. And today is September 22nd, 2025. Um, as y'all can maybe see up there, it's too green. Monday, September 22nd, 2025. I'll show you guys the charts. Let's get straight to it. Let me give you guys education. I don't want to talk much. And boom. We'll start off on the daily. I want you guys to see what the daily has because we always start on daily, start the higher time frame. All right, let's get to it right away. I'm gonna take everything off. There's this. This is the day that happened today, right here. This is what I'm seeing earlier. I'm seeing kind of this wickage down here. This was not all played out, but we are at all-time highs, so I am bullish, correct? And for me to take a bearish trade, I have to see some sort of higher time frame confirmations, like the 4 hourly and hourly, giving me kind of order flow to tell me that I am bearish on the day. I ended up taking a loss on the ES, risking 1% of my account, and then I took a win, risking 0.5%, and then that caused me to break even at the day. And then I took a third trade since I'm break even. It's kind of like doing my initial risk of the day in the PM session, taking a 1% or less than 1% of risking less than 1% on the third trade, giving me a win to end the day. All right, let's get straight to this. What do I see here on the daily? Daily fair value gap right here. That's literally all I see. And we're all time highs. All right. Boom. So this is that 6 a.m. candles, or this is going to be start at 6 a.m., but it's going to lead to that 10 a.m. So I don't want to expose what the 10 a.m. is. Y'all probably already saw. So here, I'm kind of seeing we're in this range. We've come to a discount of it. But that's literally all that I see, pretty much. This isn't an order block because an order block, quick little tip. For a valid order block, you need to have a gap, a fair value gap also present for it to be a valid order block. I go on the hourly. What do I see here? This is where I had kind of that whole first, um, I guess you could say, like reasoning for my first trade. All right. We have this new week opening gap created. We come up and we fill it, and then we have a big run down. All right. What do I also see is that this gap got respected right here and then inversed at the end of 2 a.m. And then there was also, hold on, this fair value gap right here also. This was respected. Let me just go to 7, right? Yeah, okay. Boom, that's the 8. See how that got disrespected right there? That was giving me the sense of bearishness, but I kind of rushed into my trade. That's the reason I lost, because I rushed into trade. I'll show you guys exactly in a second. What do I see here? I see here a possible buy side of this hourly fair value gap, which is also an optimal trade entry of the day. Boom. Let me show you guys optimal trade entry. Okay, nice. We have that inversed again. All right. That's in optimal trade entry. Okay. So let me just take that off. That's another reasoning. That fair value gap specifically was a fair value gap that I was looking for price to draw towards. Here's 830. We come under these lows right here and we push up. We respect this 15-minute fair value gap right here. And we push up into this hourly at 930. This is 915. This next candle I'm about to show is the 930. Boom, 930. So now we're in this gap. In this hourly gap, we're also in this new week opening gap. What did I do right away? I went down to the 1 minute and I rushed. I needed a 5 minute confirmation, but I rushed into the 1 minute. That's what my mistake was today. I'll admit to it. Right here, what did I see? I saw a SMT, also a short-term run on stops. Boom. I hope you guys kind of understand what that is. This is a high, gets short-term run, and then there's this SMT between these highs. Let me show you guys that on the SMP. Boom, there's the SMT on the I'll say ES, that's easier. Boom. And then also on the 5 minute, really you could look at on anything. This high right here was also another SMT. That is the not 3 a.m. high, so the London high. Here on NASDAQ, 3 a.m. SMT. What did I end up doing? I rushed in to take a 1-minute trade on ES. I saw the fair value gap get created. I took a short right there. And my stop is above the change in state of delivery leg, also the order block. Why is this a valid order block? Because there's a fair value gap. I'm going to repeat that again. And then, why is my stop above here not above the fair value gap high? Why is it not above that high of the SMT? It's up right there. Why am I on that specific candle? Daniel, why that specific candle? Because a fair value gap is 3 candles. Right here is 1, 2, the gap candle, and then the third is the candle of the low of the gap. So I put my stop above the first candle that creates the gap series, which is 3. 3 candles are needed to create a gap. I put it above the first. That's it. Simple as that. So 1, 2 is the gap candle, and then 3. Stop above here. And what was I targeting? These relative equal lows right here. As you guys can see, relative equal lows. Boom. That was my first trade that I rushed into, and boom, boom, stopped out in 5 minutes. 1, 2. Actually, I'll just do this. This is easy for you guys to see. 4 minutes, not even 5. So once that happened, I was like, you know what? Let's be patient. Let's wait till 10 a.m., see what the hourly candle closes, see where the 4-hour candle closes, and see where we're at by then. Okay, so I'm going to just take all this off. This is the ES loss. I'll show you guys the evidence that I lost. All right, let's look at the hourly. That's that hourly close. So the next candle that I'll show you guys on the hourly is the 10 a.m. candle. This inversed every gap that I had. The liquidity, the buy side one that I had got inversed. This small gap right here, I'm not going to mark that out. It's too small. And we closed above the new week opening gap. Another confirmation for us. Let's go to 10 a.m. Boom. It closed right there. Now what am I seeing? We're above new week opening gap. Here is the previous all-time high. Okay. Let's go to the hourly just so you guys can see. Okay, nice. That got exposed. All-time high. Previous all-time high. There's nothing left. That's previous all-time high. All right, back to the 15. Now, there's this 15-minute fair value gap that I could use as my sell side to target all-time highs again, these relative equal highs, or this 5-minute fair value gap right here. Why am I going to use my sell side as this 5-minute fair value gap, not the 15-minute fair value gap under it? Couple reasons. 1, this is in a new week opening gap. I don't want to see new week opening gap disrespected again. That's reason 1. 2, when is an order block valid? When there is a fair value gap next to it. That's reason 2. Reason 3, I don't want to see this order block invalidated. And for us to go down to here, I'd invalidate this order block. Even if you, who knows, people say wicks and stuff. That's for all of you guys that say wicks. Also, I don't want to see us come down this far into the range because this is an intermediate term low. This candle closed out this 5-minute fair value gap. What is an intermediate term low, Daniel? It is a low that closes in a fair value gap, a candle that closes in a fair value gap. So this low is an intermediate term low. Why? Because it closed in this 5-minute fair value gap. Okay, that shows us why we're not going to use this 15-minute candle as our liquidity. We're going to use that 5-minute as our short-term sell-side liquidity, and that's what's going to target these highs. I drive down to the 1, just to show you guys that these are all relative equal highs. Look at the high price right here. This is 24,888. I come over here. 24,888, 24,888, 24,888. So they're all equal to the pip. So that's like retail is thinking this is the high of the market for the day. You know, we're not going to break all-time highs. We're going to start resisting back down. What would people see? Oh, change and save delivery right here. Like this right here is change and save delivery leg. And there's a fair value gap. So that gives us validation to take a short right here. And this is going to be a valid change and save delivery leg. No. Why? Because we're all-time highs. We don't want to target lower. And all this hourly confirmation just got inverted. All these gaps got inverse. We closed above this high on the 4 hour. We closed above this series of down close candles. There is nothing telling me to go short anymore. And I already took the mistake on ES. So, now that I'm seeing this, I'm going to drop down to the 1 minute and just show you guys that that tapped it. Boom. That's the low of that 5 minute fair value gap. And it got tapped right here, as you guys can see. Oh, that's all I need. That means stops were taken. Now what am I going to wait for? I'm going to wait for a break in structure and just take a fair value gap up or the change in shape delivery, anything like that. Boom. What happened right here? We see there's this gap, and a break of structure right there. This is the high, swing high made between of these three candles, and then the low, and then we broke above that. Daniel, we're respecting this bearish fair value gap, and we're in here. Take the short. No, because I'm targeting these relative equal highs, which is also all-time highs. What did I end up doing? Simple. Let me just, boom. That's what I ended up taking right there. Give me a second. Stop under the low right here, and targeting relative equal highs. I had one contract in, so no runners, just right there. What happened? Tapped and up. That was my trade. That was the second trade. I was going half risk on this one. So I was down $88. So pretty much break even on the day after this trade right here. Now I waited for PM session. I was going to, I'm very risk off. I'm break even for the day. I already took 2 trades. I'm risk off. I'm totally fine if I don't take another trade. The only reason I would, and I did, was because I'm breaking even on the day. And, I pretty much put no risk on the table at this point. I took 2 trades. Very relaxed, very patient for me to take another trade. Let's go to the 15-minute, go to PM session now. PM session, 1 o'clock right there. Boom, boom, boom. We run up. That's 1 o'clock. Okay. There's this small 15-minute for value gap, and there's this one right here. We touched the very small one. Let me just mark this out for you guys so it's very visible. That right there, that's the one that we touched. Okay. I go down here. Let's just look at this together, Okay, so here we can take longs and target this high right here. Okay? That's all-time high. We can go take longs right here, target that. And why am I going to drop to 1 minute now confidently, unlike before, is because we have, it's by fractals. I'm not taking an hourly fair value gap or hourly sell side or any of that, or hourly low sell side liquidity. It's a 15-minute fair value gap. So I could drop to the 1 because things are fractal. We're going for a break of structure. Happened right there. What could we have done? Taken this, stop under here, and targeted that. Why did I not take this trade? It is a 1-to-1. I'm already done for the I'm already break even on the day. I don't want to take a 1-to-1. I don't want to put risk on the table just for a 1-to-1. So I did not take this trade. It would have played out. I would have entered literally right there and got out a minute later. Would have played out, would have given me a 1-to-1. I didn't want that. I was very patient in what I was doing. Now, what did I wait for? We're still pushing all-time highs. Now, at 2:30. So at 2:45 actually, another 15-minute fair value gap right here, and we're still in the 2 to 3 times, so silver bullet time. That's an ICT concept. I still want to target all-time highs. Right here, boom. You see that how it fills this in? Let's go down to the 1 minute and talk about this. So this is what I'm seeing right here. I'm targeting again all-time highs. So right here. I'm very patient in my model. I see this is going to be the liquidity, as you guys can see right there. And I don't really care about the 5 minute what do I see on the 5 minute is, I'll just tell you guys what I'm seeing. There was respect to this fair value gap, and then there was this candle right here, this down closed candle. Doesn't mean too much to me really. This is what means a lot to me. What am I going to see here? We get inside of here, and now I just want to see a break of structure, a model come to fruition. We come under here. This is structure. We see how we break above this high, swing high, broken above. This is it's same exact thing I took in the AM session, again happening in the PM session. What do I end up taking? I see this fair value gap right here. Let me mark it out for you guys. So that's where I could enter. And I entered in on exactly this candle, stop under that, and targeting that high. I got in with 3 contracts. This is a 1 to 1.5. I got in with 3 contracts here. And then my second target, I didn't take all of it right there. My second target was standard deviation. So this level up here. We got in, let that play out. You see how price is still respecting this fair value gap? Right? The bodies are just perfectly respecting right there. And we let it play out, Boom, that gets hit right there. So I take off 2 out of the 3 contracts I have, and I leave 1 to run. Run up to where? Standard deviation, as I've already said. But whenever I take off 2/3 of my position, I put stop at break even. Let price play out. I'm just waiting. Boom. We got stopped at break even right there for the last contracts of our 3. We took 2 profits right here. The third one got stopped out right there. 2 contracts taken off at 311. The last contract closed at break even at 335. And now what am I targeting? Nothing. I'm done for the day. I'm up for the day now. I was down -88 after pretty much break even for those first 2 trades. I put on risk again. This was a $400 risk, or like 405. Actually, I could just show you guys. Oh, I can't. We're on replay. But yeah, that's all what that is right there. And why am I confident in these trades? Why did I lose the first trade, and why did I win the other ones? First trade I lost because we took out hourly liquidity, hourly fair value gap, and we are at all-time highs, and I wasn't patient, and I took a 1-minute entry off of an hourly like liquidity sweep, I guess, entrance to a fair value gap, which I should have waited for like a 5-minute confluence, but instead I didn't. Here is whenever I did. We're at all-time highs, and we're taking short-term liquidities, like 15-minute, and the other one was a 5-minute. So I could drop to the 1-minute and take entries off of there because price is fractal. So that's why these played out, the other one didn't. And just for you guys to see the confirmation and everything, this was the last trade. Let me show you guys the first. So I lost 420 on the first trade. Here's that confirmation for you guys. Let me take off this. I don't even use this. You see we entered short here, got stopped at that third high, at that third candle high of the fair value gap. Boom, perfectly aligns. Just so y'all could see right there. And then I took the second one with half risk. I only made $332. That's my notes. But if you guys want to pause and read these, go ahead. But yeah, this was the other trade I took. You see how there's that 15-minute fair value gap? It didn't get touched and we kept running because of what I said in the video. So there it is. Price touches that 5-minute fair value gap on this low. Drop to the 1. There is my entry at that fair value gap. Stop was under here, and we targeted that high. Contracts, 1 contract traded. So I just closed full position right here. No space for runners. Then the last trade I took made 401, which was what I showed you guys. Entry right here on this fair value gap. Took 2 positions off here, and the last one off at break even. So entry right there, and boom, perfectly aligns with break even. We got out the last position at break even. This high was the all-time high. That's pretty much it for the day. That's all I have to say. And I wish you guys the best of luck trading. I hope you guys see this as informational. You guys learn from my mistakes, learn from my corrections. I know I'm not trading live, but I'm here showing you guys all the like executions on here, showing you guys that I did take these trades. But I hope you guys learned something from this. I hope you guys can enforce what I'm learning, and I hope you guys can constantly see these little tips I'm giving you guys and constantly see that you can easily keep growing in this industry, and you can always find improvements not by just watching me. There's also a lot of other influencers that are very, very good and very, very informational. I wish you guys the best of luck trading, and I will see you guys next time. Peace. D Mike out.